Hello and welcome to Quantum's investment markets update for Q2 2024. So we'll just give a quick update on key issues and performance over Q2 and then we'll move on to an investment outlook after that. Okay, so first we'll just highlight some key macroeconomic points. So inflation is cooling across the developed world, especially in the UK now, although we have seen a plateau in that fall in inflation in the US and the Eurozone. So we've seen services inflation run a little bit higher as well, especially in the UK, despite that fall in inflation, and this may keep inflation a little bit higher for longer in certain areas. The European Central Bank cut interest rates by 0.25% during June, so they were the first main player to cut rates. As their inflation, they believe, is now a little bit more under control, and also their services inflation is a little bit lower than ours in the UK. Also, more rate cuts are expected this year from the European Central Bank, the US Fed, and the Bank of England as well. The UK economy has rebounded well following the mild recession over the latter half of last year, with 0.7% growth over the first quarter of 2024. And this was meanwhile the Labour Party in the UK achieved a landslide victory in the UK general election. UK markets have been fairly stable as it was a fairly certain outcome there. Meanwhile, in France, markets have been a little bit more choppy since the snap election there, as the New Popular Front struggle to form a government now. And then finally on this slide, inflation and geopolitical risks remain the key concerns for markets at the moment. And now we move on to what this means for investment returns. So let's start off with fixed income. So it was a poor quarter for fixed income in the UK. We saw negative performance for nominal and index-linked government bonds, and also negative returns for sterling corporate bonds as well. So bond yields rose sharply over April, and this came in light of the stickier than expected inflation and a subsequent correction in interest rate expectations, where investors essentially pushed out when they think central banks will start cutting rates. Performance picked up a little bit over May and June, but not quite enough to negate that negative performance over April. And then finally on this slide, at the bottom left here, we can see over 15-year corporate spreads, and spreads, as we can see, do remain relatively low at the moment. They did pick up slightly over the quarter, however, they remain low. The main reasons there are the improved economic environment and also the attractive yields, which are increasing demand on those investments. Moving on to growth assets, it was another strong quarter for equity markets. AI sentiment was a key driver of the performance over the quarter. As we can see by the chart on the top right there as well, we've seen strong returns in equity markets over 12 months as well, with the US performing particularly well over that period. So the US has performed very well of late. Again, AI sentiment being one of the primary reasons. The Magnificent Seven performed extremely well over the last 12 months and over longer periods as well. So the US market does seem a little bit more concentrated now. However, we have seen good performance to date. Another thing worth mentioning on this page as well is gold. Gold reached record highs once again over the quarter. Central bank demand, particularly from China, and also interest rate cuts are the key drivers there, or interest rate cut hopes, as investors prefer to hold gold in a lower interest rate environment. And then finally as well, volatility remains relatively low at the moment, and this is despite the ongoing elections and conflicts. So something to watch out for, I guess, as volatility could increase if things get a little bit worse in certain areas. In terms of the economic outlook, things seem to be moving in the right direction now. Inflation continues to cool across the developed world, so across the US, Europe and the UK. UK inflation has been on target at 2% the last two readings as well. So in Europe, this has allowed the ECB to make their first rate cut, which happened last month. And the ECB, the US Fed and the Bank of England are expected to all cut rates again at least once this year. In terms of economic growth as well, things seem to be moving in the right direction, especially in the UK, where the UK economy grew by 0.7% over the first quarter of this year, following that mild recession over the latter half of 2023. In terms of the risks, as mentioned previously, inflation has been a little bit stickier than expected. Services inflation remains higher, at around 6% in the UK. So something to watch out for there. And this inflation stickiness has the potential to disrupt certain markets that have priced in interest rate cuts if those interest rate cuts don't materialise. And then finally, geopolitical tensions could disrupt markets as well. This ties in with the inflation theme as well, as if those tensions or conflicts disrupt supply chains, they could feed into the inflation issues as well.
Thank you for listening to Quantum Advisory's quarterly investment market update. We hope this edition has been informative and provided you with a useful update on the current economic climate. If you would like to discuss any of the topics raised in more detail, then please get in touch with your Quantum contact. Once again, thank you and goodbye for now.